There may be questions about the future of auto sales, but the latest government report shows overall spending is still healthy. Consumer spending, which accounts for more than two-thirds of economic activity, rose 0.4% in June. That's the third straight month of gains. So what are some of the most consumer-focused businesses saying about the health of the consumer? Bob Pisani takes a look.
Considering everyone is talking about how well the consumer is doing, the news today reflects a perfect little storm for consumer names. So auto stocks were down on the disappointing sales from Ford and GM and Fiat Chrysler. And the retailers like Dillard's and Kohl's and Macy's and Nordstrom were all down in sympathy with the auto stocks. Airlines were down as Delta Air said its unit revenue fell 7% in July. And then the restaurants were down as Texas Roadhouse reported a beat on earnings, but same-store sales appear to be slowing down a bit, and that took other restaurants down with it. And then the cruise ships were down because Royal Caribbean cut its outlook on higher fuel costs and on currency issues, particularly on the weak British pound. So is the consumer really weakening? Well, not necessarily. Royal Caribbean said bookings were strong, and the damage to airlines and autos appear to be largely self-inflicted. So the auto companies have been providing these outsized incentives for months now, and airline companies have added too much capacity recently. Finally, bear in mind that some of this reaction may be statistical. Stocks reversing course and moving back to their averages. Retailers have been notable outperformers post-Brexit, so it's not surprising they give back some of their gains. For Nightly Business Report, I'm Bob Pisani at the New York Stock Exchange.